Welcome, everyone, to the Wealth Amplifier for a year-end special episode. Joining me today are Matt Liebman and Aaron Marks, as always. Hello, gentlemen.
Hello, guys. How you doing? Doing well. Feeling good.
Good. So for this episode, we are going to review some of the predictions we had made. If you go back to, I don't remember the exact episode number off the top of my head, but the episode from the beginning of 2023 where we made predictions around what would happen to capital markets and the economy in 2023. We're going to be reviewing those today. Now, Matt and I have not reflected or reviewed that podcast in many months. So we're going into this blind. Aaron has. So Aaron's going to be moderating and reminding us of some of the predictions we made, and we're going to see how well we did, kind of thing. And then we'll make some predictions of our own for the year ahead and the state of the world we're in for 2024. And we'll touch a little bit on our favorite topic of client and human behavior and how any of this relates back to what we're able to control and if any of it actually matters at the end of the day. So the stage is set. Aaron, I'll pass the ball over to you to introduce us to our own predictions and opinions from the beginning of the year.
The review. I'm the keeper of all the information here. Because I did listen to the recording from last year. At one point, I said, will we be a bunch of bozos or not? So we shall see. Okay, so first, just an outlandish one, not an outlandish one, but not a direct stock market, bond market. Nothing all that thrilling here. We did a bit of a mishmash of prediction. We all didn't make the same prediction and the same call on every different topic. But I asked what is more likely: Bitcoin at 1,000 or 100,000 next. So if it had to shoot higher, short lower, where would it go? And at the time, Bitcoin was at about 17,000. Right now, it's up over 150%. So had a good year. Pat, did you recall what you might have said?
Yeah, I took the bearish view. If I'm remembering correctly, I think I said it was more likely to hit 1,000 versus 100,000.
That is correct.
Yeah.
And Matt?
I think I took the other side of that. Not a huge Bitcoin guy, but I figured if I had to pick one, I went to the upside there.
Well done. So obviously neither of us has happened, but just reviewing some, it's an easy primer just to get back in. So now to the good stuff. So big topic of conversation was interest rates, and will continue to be interest rates for a while. So we were talking about, are there going to be hikes? Are there going to be holding cuts? What that was going to look like? So I'm not going to make you guys guess at what you said. I'll give you the answers here, and then we can comment. Matt, at the beginning of 23 or end of 22, whenever we did this last time, he said, I think there will be one or two more hikes. People are calling for rate cuts, but I don't see that, in the words of Matt. No rate cuts until 2024 at least, and thinks that we will hit a peak and the Fed will hold.
Wow.
How about that?
It's pretty nailed it, as one might say.
I mean, I used to be a bond guy. I guess I still got it, at least for one there. So I like that prediction. All right. How did Pat do on that one?
Well done. So Pat, in a wise way to follow up, said, hey, I can't go against Matt, but if I had to guess, maybe we'll get a rate cut later in the year. But he said, look, the reality is Matt's probably right. So rate cuts are being talked about, but not here yet.
Right.
We'll get to that in the 2024 predictions.
Right. I'd thrown mine in for entertainment value. I would have stayed in line with Matt had it just been staying with the consensus view. But well done, Matt. Well done.
My answer, I said, look, the consensus, I tend to go just opposite way and feel like what everybody thinks, the opposite will happen. So I said the consensus is rates stay high, get to about 5.25, and then get a cut. No one says rates are going to continue to go higher. So I said continue to go higher, which was, I guess, incorrect, but maybe in 24. We'll see.
We'll see.
We will see. So really we have two other predictions. I'm going to save well, they're sort of one and the same, mostly about the stock market. Pat had a specific prediction for the U.S. stock market itself, or just I'd say stock market, no, S&P 500. I had the same, and Matt had one, not so specific, but a broad comment on the direction of the market. So, Matt, you called it an outlandish call that the U.S. stock market will not make new lows from 2022, nor will we make all-time highs of
Ooh,
about
I was
48.
so close. I was so close.
Well, but I think you're still right.
Oh wait, yeah. Did we not? I think some did. Wait, did one of the indices hit a new high last week?
Something. I don't think it was the S&P 500 because the S&P 500, I believe, was the all-time high was 4,800.
Right. So does that mean then I have to root against the market for the rest of the month?
You just got to hold steady.
Right. Yeah, I don't think we hit any all-time highs in U.S. markets, unless the Dow. I'm trying to tell. It's hard to tell from the chart I'm looking at. I think the Dow is closest. The Nasdaq and S&P, I believe, are both off their all-time highs still, despite.
And that's interesting because the Dow has certainly lagged the other two this year,
Correct.
but it went down a lot less last year, so it had less room to make up.
Correct.
Which I guess is a good risk management lesson in and of itself.
Right.
So again, a good call. Did not make new lows or highs. Getting towards the high, which I guess is, hey, prefer that than otherwise.
Yeah, sure. Right, I'll take it. But yeah,
well done. Well done. So I like this one, right? Stock market. From Pat, the S&P 500 will finish the year with a positive 20 to 25% return.
Bold call. And wait, where are we right now? Do we have a number on that?
I have price return alone, so not including dividends, at just a shade over 20% year to date.
Okay, so with dividends, you're, let's call it 21, 22. So you're right there, Pat.
Right
that was,
there.
Nice work.
And that was not the consensus last year.
It was not.
Now
so you must have one coming that shows that we're bozos, because there's no way we got all.
Really, I don't. But I'll tell you, Pat, you should have just stopped there. You said 20 to 25%.
Uh-oh.
And then you said, more specifically, it will be here to own all stocks, small, mid, large, growth, value, as a.
Yeah. Like I knew that being as specific, I couldn't like get any more specific than that. So I tried to cover my tail and just use everything. So everything is going to go up, but obviously that wasn't the case.
So close, but that was a great prediction. Mine on the stock market, the consensus was first half uncertain, second half off to the races. I predicted the opposite. I thought we'd be pushed into a recession. Everybody would freak out, and then the stock market would pull back. Obviously, that has not happened. So really the opposite. The opposite of what I said. Consensus was right. First half uncertain, and then the end of this year has been very good.
Yeah.
Wow. Well done.
Yeah.
Well done, Pat.
And look, if I can introduce some humility to this prediction, it had nothing to do with any sort of technical, I know better than any other major strategist who has, PhDs and degrees far advanced than I do. It more has to do with the fact and the drum that we kind of always beat, that if you just look at history, use history as your guide, like zoom out on all of the apocalypse du jour news and just look at what historically markets have done. And very rarely do we have two really, really crappy years in a row in stock markets. It just doesn't happen often. So I'll take credit for it, but it's not because I'm smarter than anyone else. And in fact, I've dabbed on him a few times this year on our podcast, but Jeremy Grantham, guy who made a specific call at the beginning of this year that the S&P would finish 2023 at a level of 3,200, a 17% decline on the year, is just an example of, I was just listening to another podcast about this, like the higher IQ you have about some of this stuff, the more negative you tend to view things, because you have such insight into the risks that are at stake. Whereas if you're sort of a little more ignorant to those risks, or at least willing to look past them, then it's easier to just look at long-term trends and follow those. So just pointing out examples of why predictions are often made by the smartest people in our economy, and they turn out to be so wrong, for what it's worth.
You're right. And to go circular logic on that, I think that negative predictions, people view the predictors as smarter. When they
Yeah.
hear positive predictions from people, they think they're just cheerleaders. Maybe some
Correct.
of them are, I'm not,
Correct.
but yeah, I think you get sort of credit as being, oh, that was a savvy, smart prediction just simply by being negative. Could be
Right.
smart, could be not, who knows? But
Right. It's inferred that you're not considering the risks if you're being a permanent, optimist, right?
yeah.
So anyway,
So do you want to jump into year ahead predictions?
Oh, so I'd
Well, that was
say,
it. Yes, that was it.
let's put humility aside. We did a pretty good job there,
you
although
did.
I think we failed to prove our own point that predicting is silly and no one knows anything. Because for at least 1 year, maybe we had the right crystal ball. It worked out reasonably well.
Yeah. Now we're gonna have a bunch of confidence going to our 24.
Yeah.
And we're
This
gonna
is
get-
gonna be a
And
disaster.
back to an
It's
earlier, I think might have been a title of a podcast, Confidence Kills. So
Yeah.
be careful, guys.
All right. So with
Absolutely.
that as a backdrop, we're going to have a little more structure around the predictions this year. We have the first 4, which we'll all go around to predict, are going to be essentially multiple choice questions where you have a choice essentially of something that is kind of neutral, a little strong, a little weak, quite weak. And I'll specify it when we do it. And then we'll have some more open-ended predictions towards the end. So with that as a backdrop, let's start with the stock market for 2024. And I guess we'll define the stock market right now as the U.S. large cap stock market, things like Dow, NASDAQ, S&P. I guess we'll say S&P because that's what most of the strategists use, even though we tend to go a little more diversified. So for 2024, the 5 categories I have, which I will define them, is kind of flat, which I would describe as a -5 to +5% year. Either side is 0. And then up modestly or down modestly would be 5 to 15% or -5 to -15%. And then a big year in either direction would be up more than 15% or down more than 15%. So with that defined universe, Pat, you fire away first. Where are you on stocks for 2024?
All right. So stocks for 2024, and I'm going to use history as my guide as I did last year. For the most part, there are some outliers, but when you have a negative year followed by a strong up year, which is pretty common, the second year following a negative year is not as strong as that first year. So I will go on the positive camp, but I'm going to go up modestly just because that rings true with roughly how history has come in. Again, this is not me being smart. It's just literally looking at what history has done. So I'll go with that as my answer. I'll say up modestly between, in the 5 to 15 camp for U.S. stocks.
Okay. All right. So I'll follow up with that. I think a lot of the conversation of what's driving the stock market will be interest rates and the Fed. So I think even though, look, we've got a soft landing potentially in sight, maybe a recession, maybe not. But I think if you do actually get some rate cuts, that will really propel the stock market higher. Even if you do get that recession, and as research shows, stock market a lot of times bottoms before. So I think you can have another big up year. I think I don't know when the last time is we had 2 big up years in a row, but I'm counting on it for 2024. There's going to be a lot of volatility, especially with election coming and all the other uncertainty in the world. But I'm going to take a big up, over 15%.
All right. So I'll go outlier here. I'm going to go with kind of flat. That a sort of not unremarkable year. If you ask me which side of kind of flat, I'd probably say slightly positive, but not quite of the 5% up variety that Pat was calling for. And I think in particular, not to get too granular and nuanced on the answer, we're talking about the S&P 500, which has had a heck of a year this year and has really led the way along with the NASDAQ for several years. If we broaden this out to some of the indices that we look at, and we do a blended index, but I think small caps could have a really strong year, right? I think other areas of the market could be even stronger. But if I look at the top line S&P, which is led by those 7 big companies that were wonderful this year, I'm going to go with the kind of flat category.
That's fair. And if I could interject on and just get your guys' thoughts on what you just mentioned, Matt, like other areas of like the stock markets outside of just large cap US names, before we jump into bonds or anything else. I would agree with you on that one, Matt. All right. Because if, again, you're going off of like sort of contrarian logic, most of what has led stocks higher again this year have been these incumbent mega cap names. It seems unlikely that those will again lead the market higher, although that wouldn't be that much of a surprise with how well they've done over the last 15 years or so. So yeah, any other thought? I would agree with you one, I guess, on smaller or medium-sized companies in the U.S. being better companies to own next year than they certainly were this year. How about a question for both you guys, since it's the permanent question everyone asks every year, at least in our world, and everyone always seems to be in this camp, and it never comes true, at least the last 10 or 15 years. Is it finally time to own more international stocks versus the U.S.? It's
I
2040.
knew you were going there.
Yeah.
Um, it's almost. I'll say this: it's got to happen one day. Markets don't go in the same direction forever. The emerging markets in specific are pretty hated right now. So if you go to like Aaron's point about being a contrarian, I'm not there yet to say it. But if one wanted to be a contrarian, this would be the year to go for, because I feel like everybody has gotten a little U.S. bias, again. But I feel much stronger about the small cap call than I do about international. I'm lukewarm on that one. Not taking a big stand on that one right now. Aaron?
Yeah, I don't think I disagree there. I don't have a ton of conviction on that side, and you haven't seen many people banging the table in on CNBC, Wall Street Journal about getting more exposure to international equities, and maybe that means it is the time to do it, because when everybody is banging the table, it's the wrong time. But yeah, I think having that home country bias here in the U.S. probably makes sense for now.
I'm almost more curious for your guys' thoughts here too. Like, I almost at this point in my career, with the way markets have performed over the last many years, and if you look at the economies specific to developed countries outside the U.S., they are not as much tech heavy, right? Like your major semiconductors, your major internet companies sort of reside in the US or China, and they don't really reside in like the UK or Ireland or Germany certainly has. But a lot of the European developed countries are more manufacturing based, right? So I almost think, not, I don't know what's going to happen. None of us do, but that could be a case for it, right? If this obsession with artificial intelligence simmers next year, that means tech maybe is not as great to own. Maybe things like manufacturing and whatnot are better to own, and that would be a boon for developed nations outside the U.S., right? Just kind of more like educational thoughts, but
Yeah, and I think on that, and I haven't looked at the percentages in a while, but it used to be that the financials made up a big part of the index in Europe, and that is a sector that, frankly, it's been about 15 years since that sector could get out of its own way.
right.
One of these years, I imagine it will happen. Maybe after the whole who was it, UBS Credit Suisse thing over there, perhaps there's a little more stability, and you finally see that there in a more value-based bent in Europe. But next question. Let's go to the other major market. We just did stocks. Let's do bond market. And again, we'll stick with here the U.S. Bond market. And I won't go nuanced to munis. We'll just deal with the general bond market. But it probably would apply to munis, treasuries, investment grade bonds. Same exact format as stocks, except the numbers are going to be a tighter range just because bonds tend to not move as dramatically. So kind of flat. I had -2 to +2, up modestly. And this is, again, price return. This is not rates. Up modestly or down modestly would be 2 to 10, and then a move over 10%, which you rarely see in bonds, but has happened in both directions. Where would you go with bond markets next year? Aaron, you can kick us off this time.
I think I'm going to stay flat. I don't think you're going to see the wild moves as we have. What was it, 22, the worst bond market we had, and
since the Civil War or something.
Right, the Civil War. I don't think we're getting that. In the last month or so, we've had the best month. I've seen a couple different publications quote it differently, but something like the best month in bond returns since 1985.
I think you're right. I think it was 85. I think you're right.
So, yeah, the 10-year treasury went from 5% down to 4.2 in a matter of weeks or a month. And that's a drastic move from 5 to 4.2. So I think a lot of this will follow the Fed's Their action, I think, were at higher for longer. Rates are going to stay where they are. Not a ton of movement. That's what I would project.
And by the way, I should have specified we're talking about total return for bonds, so that you do get a bit of a coupon, you
Yep,
get either direction the price, and you're still kind of flat there.
that's right.
Pat,
I'll go. So as much as I hate going with the herd, since that ends up almost always being the wrong camp to be in, I will say I think bonds will be up big next year, on the combo of,
okay.
rate reduction and just higher starting spot for income. I'll caveat that by saying I think it won't be as much of a direct line as everyone's predicting. We're predicting rate cuts as early as May, I think, from what I've seen. I think there will be some small black swan type of unknown event that could throw people for a loop with their predictions, but eventually we will finish the year. So I could see bonds being a little volatile potentially, but we'll finish the year with big price returns on the back end of some rate cuts throughout the year.
All right, so I am going to go with Aaron on this one of a kind of flat. So now I'm kind of flat 2 for 2 on that. Generally speaking, it goes to what both of you were just saying there. The move we've had recently here at the end of the year, and again, we're doing this in December, and so it's possible some of that reverses before year end and so on. But no one's holding us to this. These are just random predictions. So I think the bond market's got a little ahead of itself so far, and so therefore, I think rates. We've been talking a lot for a couple of years on the stock side about volatile mediocrity. I think bonds or rates are going to move into next year, which have been very volatile. They're going to move into just the sort of mediocrity. I think they're just not going to move very much, and therefore, to me, you might get a slight reversal, a little higher move in long rates. Not the Fed. We're going to get to that next. But then when you have the income, I think you put it all together, you've probably a flat to slightly positive bond market on the year. All right. Speaking of the Fed, and we did a pretty good job in this last year, but here we are. Same exact parameters on the Fed. You could say no action from the Fed next year. You can say modestly dovish or hawkish which would be 1 to 4 cuts or 1 to 4 hikes. Or you could think the Fed's going to take big action next year, which would be either 4 hikes or 4 cuts or in excess of that.
So let's let Matt go first so I can copy him.
I am. All right, I'm going to take the chicken way out here and go consensus, which is actually, you know what? I'm not. I was close to consensus. Had we done this podcast 2 or 3 weeks ago, I would have said modestly dovish with 1 to 4 cuts. I think given the moves in the stock market and the bond market over the last few weeks, I think the markets have done a lot of the Fed's work for them already. I don't see any need for the Fed to have to press the bet. You have a still growing economy. I'm not in the recession camp next year. I don't think it's going to be amazing. So therefore, I am in the rare place of no action from the Federal Reserve in terms of interest rate moves for 2024.
Not just saying this, but I was in the same camp, I believe. I don't think you're going to get all the rate cuts. I think Powell has been pretty steadfast in saying, hey, like rates, they might have to just stay here for a while. Hard to believe what they always say, given their prior actions, but I think they do stay, and maybe to be even a little stubborn on their part to say, hey, look, we got it right thus far. We said we're going to stay, and we're going to stay. So I think I'll follow along with what Matt said.
All right, I'll change it up just a little bit. I'll stay kind of boring though, because this is the consensus. So I'm going consensus two in a row here almost. But I'll say modestly dovish, but maybe just to add some spruce to it. This is what I believe too. I'll say there won't be 3 cuts, 4 cuts. There will be 2. They're going to have 2 cuts. I'd say they're both the back half of the year. I think they stay pretty hawkish and at their current levels. While the rest of the investment world clamors that they cut, and the bond market gets it wrong, which dovetails back into my last prediction. But then second half of the year, there's a little more impetus to do so for whatever reason, whether it's recession or political pressure, which they're not supposed to give into, or whatever. I think you get a couple cuts at the end of 24.
There was a good political commentator that we heard at a conference recently saying that the Fed does try to avoid any
Right.
big decision before an election because it looks like they're favoring one party or another.
Right.
So,
So that could mean that's a good reason to go no action also.
Right.
And to that, I was talking about this topic with my dad recently. He asked, he's like, do you think there's any chance they actually hike at the next meeting because of how aggressive the bond market has moved down? And look, I would never say no chance, but my answer to him was not quite there. But I do think you'll see the next statement, if markets continue to be this friendly, maybe a little less dovish on the statement, if I had to guess, just to set expectations back. But
fair.
Speaking of politics, the always fun one, and let me add my disclaimer before we even get here. This is not an endorsement of either candidate or party or anything. We're just trying to look into the crystal ball. So with that said, because I know we have plenty of both Democrats and Republicans and independents listening right now. So with that as a backdrop, and Pat, you can lead us off here. At this time, let's say 1 year from now, when the election is over, but we have not reached inauguration date, I kept this one vague. Are we preparing for A, Biden's second term, B, Trump's second term, or C, other? And if you're going to go with other, throw something in there, what you might see.
Yeah. All right. So I'll kick it off. I'll throw a teeny bit of gas on the fire here, but just a little bit. In just saying that the fact that, at least personally, those two are the most likely options, A and B, either Trump or Biden being reelected, just depresses depresses me. Like, it's just like, it's a shame that these are our choices. These are going to be incumbent choices, two guys who should be retired and not bothering us any longer. Again, being nonpartisan, I don't mean to upset anybody, but like, come on, like, let's do better as a country. Like, let's get someone else in the
Rather than upset anybody, you're just upsetting everybody.
Yeah, I'm going to upset everyone. Yeah, exactly.
Equal opportunity.
Yeah. Like, I don't know. It's just depressing to me. Maybe it's because I'm a younger person in the workforce or whatever, but I'm just sick of seeing, either of these idiots that just think that they're so, anyway, you get the point. I'm not a fan of either candidate, but if I had to guess and make a prediction, I'm going to say that we are B, preparing for Trump's second term. And that is, again, not a partisan comment whatsoever. I'm just going based on current odds, which actually I think favor that outcome at the moment.
I believe that's correct. Aaron, I'm gonna back clean up on this one. So
I've struggled on this one. Like we said, the people that are the highest IQ, they sometimes know too much, and they are very negative. So we that same political commentator I referenced in that last segment also mentioned, look, just the way the political system works, it's going to be hard for it to be anybody other than Trump and Biden going head to head. So, to the point, can it be somebody beyond Trump on the Republican side? Even though, maybe a lot of people want that, it's probably not happening. And if you have a head to head again, the report this morning or over the weekend that in the two states that Trump lost to Biden last time is now winning. I think it's going the same way that Pat said, and I think it's just like sort of like the American way now. Like the international world looks at us and be like, "Come on, bozos! Like, don't you remember a couple of years ago? Or also we have no memories." And again, not a political statement at all, but man, it was tense. There was just everyone was angry at each other. I don't think people remember that, but I think just the way we are as humans and Americans, we're going right back to it.
All right. So we have two, not votes for Trump as in you're voting for Trump. I'll let you guys keep that private, but you both think that's the most likely outcome. I'm going to go contrarian here, or I don't even know if it's contrarian. I'm going to say other.
And
this is me playing, I think, let's call them bizarre odds, because you get a lot of things that could happen under other. I'm not wishing for like the medical impairment or demise of either person, but they are getting up there. So that is a possibility that would lead to somebody else. We do have legal challenges in Trump's case for him directly, in Biden's case, indictments last week of his son, which could lead to ramifications there. There is still a growing groundswell on the Democrat side, for there to be another candidate. and you still have Nikki Haley, let's say staying relevant in the Republican primary. So if I had to pick one of these three, I'm going to say other, but given that we have to specify, if you do say other, what you think the most likely is, I do not think it's going to be a third-party candidate. I do not feel comfortable predicting anybody's cognitive demise nor incarceration. So I'm going to go with Nikki Haley pulling the upset that no one's expecting.
All right. I hope you're right, Matt. I would go other, and again, this is me showing people that I'm pretty nonpartisan. Either candidates from either end of the spectrum, anybody, just give me C, give me other for sure. I'm with you on that.
All right, so Pat's on the RFK Jr. train. All right, so for the final section predictions, and we know this podcast is going a little bit longer than we normally do, but this is sort of our annual prediction one. So we'll do with the final set, and then we'll just do a couple show or book recommendations. But this one is just a rapid fire wild card. 3 categories: sports, politics and global affairs, and markets. Just give a random unscripted prediction for 2024. So if you want to do sports first, get off of some of the heavy stuff and go to the really important stuff. All right, Pat, what sports prediction do you have for this year?
All right, I'll go. Here's a contrarian one that's starting to gain some momentum. I'll go stick with my hockey, NHL. As much as I wish as my sort of hot recently New Jersey Devils win the cup, I think they're still a couple years away. I'll go Connor McDavid, the best player in the world, and the Edmonton Oilers after a terrible start and being outside the playoff picture still through Christmas. I think they return to glory, and the best player in the world finally lifts the cup in May or June, which is insane that the Stanley Cup goes that long these days. But go Edmonton Oilers, win the Stanley Cup.
And that would be their first one since Gretzky in the 80s, right?
Yeah.
All right. See that hockey knowledge there, Pat? That's about good. As deep as I go in hockey.
That was good.
All right, I'll go next.
You notice the silence on my part.
Right. All right, I'll keep it with home, as Aaron said, home country bias. This is the year that America's team, the Philadelphia 76ers, finally get out of the second round of the playoffs and make it to at least
so bold. Just to get out of the second round.
Just get out of the second round. It's I think Embiid, I believe, has been to the second round 5 times and never out of that. The next highest in NBA history, I believe, is Dominique Wilkins at 2 or 3. So it defies logic. It's hard to get to the second round. Usually you break through at least once. This is the year they finally break through.
Playing the odds. I like it.
I'm telling you, I'm having a hard time on the NFL side. Neither of you brought that up, but who the Super Bowl favorite is, I don't want to say the Eagles just because that's too much of a hometown thing, and they've looked terrible the last 2 weeks. So I've struggled on that. I don't want to say the Cowboys because I think they just shoot themselves in the foot every single time. Are the Chiefs at risk of missing the playoffs?
Technically, yes. They're only 1 game up on the Broncos, who beat them once. I don't know who was the tiebreaker. I don't know what happened the second time they played, but in theory, if they go into the tank, they could miss the playoffs.
I feel like it's going to be somebody that was hot early that they haven't heard as much talk about them recently. The Dolphins, they were hot early, and maybe they're the ones that
Detroit.
Not sneak in by any means, but man, they got a lot of power and
well-coached team too.
Yeah. I think that's the right way I'm going.
As the well-advertised Giants fan on this podcast, I'll just say to cheer you guys up following the Dallas loss last night. If I'm an Eagles fan right now, as a contrarian person in general, I'm psyched about the last couple of weeks. Not psyched, obviously, because your team didn't play well, but almost never does a team just dominate the whole regular season and rip through the playoffs. Very rarely does that happen. Obviously, the Chiefs have done it recently, but like if I'm an Eagles fan, the team is what 10-4. Sorry, 10-3. Right, record's great. You're gonna be fine. You're gonna have one of the top 2 spots most likely, and I'll take my late season adversity now. Like that is what galvanizes a group as you're going into the playoffs. So if I'm an Eagles fan, I'm fine with it. Take a couple on the chin. Take it now and then get hot for the playoffs. I hope that doesn't happen, but give me a vote of confidence.
I love that. So if that happens and then they win the Super Bowl, I'm going to get you a T-shirt. All right, so let's do let's do a markets prediction outside of what we spoke about. Anything that you look for in the markets next year?
Pat, what do you got?
I'll jump in. So outside of financial markets per se, I'm going to go housing market. Housing
Sure.
market's been this like nonstop rising, like a similar to like tech stocks. It's just sort of nonstop. There's no supply. It's been there. All these all the components of the housing market have stayed really, really hot, even with interest rates going up. I think, which would be again sort of contrarian logic, if interest rates do fall next year, I think actually you'll start to see housing prices start to fall. I think it'll be a combo of most of the fact that there's no supply in our country, because mostly the baby boomer generation still owns homes free and clear with very low mortgage rates. If they see supply start to come back in and the demand pick up, I think people will get that FOMO of, oh my God, I need to sell my house because I'm retiring or whatever. And that might finally introduce some supply to the market, and prices won't be, I'm not predicting like a 20% drop in home prices, but I think home prices start to drop a little bit, which is, would be the first
General
one.
thinking is when interest rates get cut, you have stock price, how home prices go higher because okay,
Right.
you can afford more. But I did just see a prediction saying, hey, if rates get cut, home prices are dropping because everyone is staring at each other's buyers and sellers, and the sellers aren't putting their houses on the market or are looking for reasonable prices. And if rates get cut, everyone's going to start looking to turn them over, and there's going to be a flood onto the market, and prices are going down. It was an interesting perspective. So
I think that was Gunlock said that.
it was. It
Yeah.
was.
Yeah.
Yeah.
All right, I'll give my random market prediction, and Aaron, you can back clean up on this one. We alluded to it already, but I'll take this one. Small cap stocks outperform large cap stocks next year in the United States. Realistically, if you could divide the market into, let's say, the top 10 and then the S&P 490, or maybe said differently, if it were like Wilshire 5000, the top 10 stocks versus every other listed stock in the US, I just think the others, which have been lagging a lot, are going to outperform next year.
I think we're due for it at some point. So I like that.
Mm-hmm.
So I'll go even smaller. IPO market starts to come back, which has been frozen for a while. And I think there's just some operators, private equity firms that are just itching to go public, and you need the right environment. And if you start to get, a little bit of an open window, rates are getting cut, things are looking good, environment's changing, you're going to get a rush to the IPO market. And whether that's a wise decision or not, I don't know. But I think you have enough pressure and pent up demand there that you'll see a wave come through at some point next year.
And
all right, I like it.
Can I throw? Oh, go ahead, Pat.
Can I throw a bonus one in there just because you guys know I like to throw a little sandpaper on it every once in a while? Private credit. Private credit's going to have something's going bad with private credit next year. If not next year, soon enough, because everybody and their mother wants private credit, and I can't figure out how it is just this risk-free returns like stock market without any of the downside pitch that everyone keeps giving. So at some point, I think something bad happens in private credit, and I don't know if that's a negative year or if it's just you're not getting 12% in private credit, but I'll throw that out there. 2024, people who own a lot of private credit going in may not be so happy by the end of the year.
Well, anecdotally, the consensus usually leads to something going the other way at the end of the year. So a couple of years ago, it was innovation in tech, which then collapsed. I think last year there was a consensus 60-40 portfolio is dead, alive and well. And it does feel like everyone's talking about private credit right now. So it would fit with that pattern. All right, last prediction segment before we get to our closing here. We've talked a little bit about politics and global affairs. Any random predictions in that arena, wherever you want to take that?
I feel like you've got one that you want to throw out
Yeah,
there.
you start
All
off.
I'm going to end my predictions on an optimistic note here. Both, and this is, obviously hopefully with a successful resolution, of course, both major wars going on right now conclude in 2024. And hopefully make it through to the end of 2024 without any major, and there are always going to be conflict somewhere, but without any major of the headline grabbing wars that we're currently going through. Obviously, there are missions that need to be accomplished first, and I won't let my own opinions go there. But I do think the wars wrap up in 2024 for the most part.
I'll just say here, and I'm on board.
Yeah, I hope you're right about that one, big time. Yeah, I don't think I have a specific one to add. Maybe just going back to the presidential election we were talking about, even if it remains the incumbents, Trump or Biden, I would just love to see some hope, some candidates emerge, somebody from either side of the aisle, just to look like a candidate of 2028 that the American population can sort of look forward to. That would
Yeah,
be
you get a lot of the younger people in both parties really are the ones stirring things up and making headaches. Because maybe they believe in this different way of doing things, but just a kind of down the middle. Doesn't
yeah
have to be a younger person, but person that's been in politics for a long time that really can
yeah
reach both sides of the aisle and not have to
non
be the one stirring things
a
up.
non-polarizing person. Imagine
Yes,
that, like just somebody who is an American leader for whatever the heck that means to you.
yep,
I don't know. Should be it'd be a breath of fresh air to see some development, some political prospects for future
right.
president
You don't have to
developing.
stand on one specific polarizing agenda that
Right.
certain people love and everybody else hates. Just like
All right, so I think politically, then we're all hopeful. You guys are talking about
Yeah.
a more hopeful centrist candidate. I am hoping for let's say, mission accomplished. I'm not calling for ceasefire now. A mission accomplished for in the Israel war, and maybe the Russia-Ukraine war starts to fade as well. So with that, Aaron, do you want to do our closing segment here?
well, yeah. So I think we'll skip the articles, even though I had a couple good ones for this time. But we're at
Save them.
40
We're going to
minutes.
do 2 podcasts a month, and starting in 2024. So save
That's
them.
right.
Yeah, there
Plenty of
you go.
articles to come. So we'll go with the book, the movie, the show that you're watching. I've been watching a bunch recently in the music and entertainment documentary world. I might have mentioned in the past that I like those, but I did not know much about David Geffen.
Mm.
And there's a Netflix documentary. It was from a number of years ago, but what an impressive guy that just decided he wanted to be in the music business, and then he dominated. And he wanted to be in the movie business, and then dominated. He became a billionaire, just from nothing after 20 years of work or whatever it was. And then after he became a billionaire, he decided that, hey, let's start a new movie company. DreamWorks. He starts with a couple other heavy hitters. So just an unbelievable person, and a pretty good documentary if you're interested in that sort of thing at all.
Nice. I will check that out. I appreciate that recommendation.
Yeah, it's a good one.
All right, I'll jump in. Rather than a specific recommendation, because around this time of the year, I turn into a total like holiday mush. I'm like watching all kinds of holiday movies and stuff. So I'll give my top 3 like Christmas holiday movies because I know
Of all time?
yeah, all time. So
This is
my
going to get
go-to.
some.
All
And
right,
if you guys want
I'm
to
ready.
try,
Yeah.
I watched 8 Crazy Nights last night, which is a great one. I love that movie with Adam Sandler. But so my top 3. So if I during the holiday season, like these are no matter what's
In
going on.
in order, 3 to 1.
Yeah, I'll go 1, 2. Oh, yeah, I'll go 3 to 1. I will go number 3, Polar Express with Tom Hanks. For whatever reason, it's very nostalgic. I think it captures the
I don't even know if
essence
I've
of
seen that
Christmas
one.
well. It's a good one. It's a kind of an undercover. I don't know if it's a consensus top 3 for a lot of people, but I'm a fan of it. These are movies that I think of as I can't finish the Christmas season without watching these 3. So that one, I'll go number 2, National Lampoon's Christmas Vacation.
Yep.
It's an absolute
Has
classic.
to be on any list. Yep.
It's a fantastic movie. And then number 1, Home Alone, just another classic. Love it. I could watch it. I could watch Home Alone specifically, like 15 times during December. So I'm a big fan of those 3.
It's amazing how that movie can still capture people after so long. I was with my sister last night. Her son is 3.5, and he watched the whole 3.5 years old. Like it's still going, and it's gonna go forever.
Yeah, I agree.
Pat, wait. No Die Hard? No, not a Christmas movie?
No, Die Hard's a Christmas movie. It's in my top 10, but it's
Okay.
just not in my top 3.
Yeah, so maybe I have I don't know. I have no violent streak that I know of, but in addition to Christmas Vacation, if I had to pick 2, I think I would go Die Hard and Rocky 4.
Nice. That's awesome.
But so a couple recommendations. You mentioned documentaries. I watched finally the Beckham one on Netflix last month, which I thought was really good. It was educational for me because I just started following soccer in the last couple of years, so I didn't know a lot of it, and I was really surprised with how exposed or overexposed he and Victoria Beckham have been, yet they're still kind of likable, which is weird. Usually people that exposed after a while, you're kind of tired of them. So I thought that was good.
Good point.
Reading yet another Morgan Housel book, his latest one that came out, Same as Ever, which we can talk about on another podcast. Just great sort of societal and behavioral observations. And then one, Pat, that you should definitely check out, because I think you are a conspiracy theorist junkie for JFK stuff. Rob Reiner, who I'm not normally a huge fan of, but I did a nice job with this. And Soledad O'Brien, I couldn't think of her name, have a podcast out about the JFK assassination that they drop like one episode a week. So I'm still only about halfway through it, but it's interesting. We'll see how it winds up. But so far, it has me captured a little bit.
What's it called? Sorry.
I think it's Who Assassinated JFK, but it's definitely Rob Reiner and Soledad O'Brien. So you can look that up.
Got it. Awesome. We'll check that out.
All right. Well, with that, we will wind down this episode. As I mentioned, we're going to have 2 episodes a month we're shooting for next year. Generally, one will be the 3 of us, and then one will be one of us interviewing a guest. And wishing everybody, of course, a happy holiday season, Merry Christmas, Happy Hanukkah, Happy New Year, and we'll see you next year.
Yeah. Well done. Happy holidays, everybody.
Happy holidays.